everybody knows multifamily can produce great cash flow, but the reality is you've created ridiculous amounts of equity when you turn that thing around. So what are you guys looking at in terms of equity already created?
Yeah, already created. It's about $2 million,
Come on. Welcome to the BiggerPockets Best Deal Ever show. I'm your lovable host, Ken Corsini, who with my wife, Anita, have flipped over 800 houses in Atlanta since 2005 and even have a show on HGTV. But this show isn't about us. It's about all the amazing real estate investors out there that are crushing it. It's about their stories, their best deals, how they sourced them, how they funded them, and what we can learn from their experiences. This is the Best Deal Ever show. Welcome to the Best Deal Ever show. I'm with my good buddy, Randy Lawrence. Randy, how you doing?
Awesome, brother. Great to be here with you, Ken. And a fantastic day here today, brother.
Day in sunny Florida, right?
Oh my God. Yeah. We've been getting torrential rain for the last 2 weeks. So thank the Lord, unusual, but thank the Lord. It's beautiful, sunny. So Lord willing, this afternoon, I'm actually test driving a Ferrari and then going a little bit out boating with the wife. So it's shaping up to be a great day.
I was about to say, that's a pretty darn good Friday, man.
For
Test driving
sure.
Ferraris and going on. I swear your Instagram, your social media in general just cracks me up because you're always doing something phenomenal. I love it.
Yeah. Well, it was funny because we set the intention probably 9 years ago that we want to spend at least 2 months a year as a family, enjoying life, vacationing, just, doing cool things. Cause it's like those memories is worth more than the money.
Absolutely. 100% creating experiences.
I see you guys doing the same, man.
It's important, man, spending time with the family.
Sure.
That's why we do what we do, though, right? To create the freedom and opportunity to do that.
100%. That's, so it's so funny. Guys get lost in that, right? Like they start off with that thought process and then they just get buried under this thing that just controls them.
Yeah.
And, so it's better to start off the right way, keep the right focus, and then you get a better life.
I recently read a book called Life in Air. Have you read that by chance?
I have. Yeah. Great book for sure.
Amazing book for those guys that have created businesses that have just consumed them.
Yeah.
Sort of helps you break that monotony. It's a real good
I
book.
read the E-Myth back in 2008, and I'm like, holy crap, I'm the baker.
Yeah,
There's
right,
no systems. I'm like, oh my God, I'm telling people what to do. I'm trapped in hell. I'm like, no, this has got to change. And so we, really became very strategic and systematic, and that helped to then, as we built, become not enslaved to things, but building with systems and process, and then it gives you a better life, man, and a better
100%.
journey.
100%. Yeah, you build a business that works for you rather than the other way around, right?
Yeah.
So tell us real quick, what parts of Florida are you in? I know you cover a pretty big geographic area.
Yeah, so we are located kind of geographically in Tampa. I'm actually Pinellas County is where our office is. The bulk of our single family operation, we did cover from Orlando down to Fort Myers. We've since concentrated back in just because, again, greater scale here in the 3-county area surrounding Tampa Bay. And so it's been like that probably for the last 5 years, again, just with strategic focus, because, our project manager can hit 3, 4, 5, 6 houses in a day instead of driving, 2 hours to Orlando kind of thing. So
Totally
burns up too much time. And again, that's part of, I think, for us, just becoming strategic. Everything we do is strategically focused to get a good outcome.
Yeah. And so you guys have primarily been single family over the years, right? Just flipping, holding, wholesaling, all that.
Flipping mostly. We started off 2003 doing small multifamilies. My original mentors, had several thousand doors, and so that was kind of always part of the process. But then, kind of got drunk on house flipping in 2004 and 5. I go to a Christmas party and dude's flipping 20 houses at a time, making, $500,000. I'm like, wow, So that's where we started, getting flipping 4, 5, 6, and really kind of drifted away from focus on multifamily just because, again, the house flipping, it's kind of like heroin, right? It's instant cash of, money coming in and it's the short-term hit.
Yeah.
Versus the long-term gain. But again, we really needed the cash flow too. So again, that was kind of that focus and carried on with big short sale company, 8, 9, 10, 11. And then really kind of started coming back into rehabbing and flipping, as the market kind of bore that fruit in, 12 through present,
Yeah.
So,
Well, it seems like the handful of times you and I have run into each other over the last year, your business has morphed, right? It seems like where you've kind of moved away from single family, or maybe you're still doing it, but you've definitely concentrated on multifamily.
Absolutely. Yeah. So it was probably like in 15, we're doing great in the single family, but it's like my wife and I talking, and it's like, really, it really is part of the long-term intention, like what we had when we started to develop the multifamily, and then just doing it at a larger scale, instead of doing, 10 and 15 unit complexes, do 80, 100, 150, 200 unit complexes just for greater scale. And so that was kind of setting that intention in 15, really starting to really dig into it, over the ensuing year, kind of mapping out, and then probably like started really getting aggressive to start looking halfway through 17, kind of things were situated well with the single family. And now we're going to start marching ahead in this arena as well to really pursue it. You know what I mean? Because we've done it years in the past, but just not at scale. And we've mastered, we've done pretty well, but with scaling in the single family and bringing those same principles to the larger multifamily.
Yeah. Yeah. Which a lot of guys, that's a pretty natural progression for folks. You've done enough single family, you realize I've got my systems. I understand how to do this. Let's just do it on a larger scale. And you're one of the guys that have figured out how to do that, which is awesome.
Yeah. Yeah. It's been, it's been fantastic. And I love it, man. It's because I used to be a stockbroker, owned a money management company, did that 15 years. So it brings together all of my acumen, resources, abilities, talents, gifts, with the structuring of deals, the SEC filings, just all of what's entailed in the larger complexes kind of brings the fruit of all my gifts together. And like I told a guy yesterday, I could see myself, in Tahoe at our house there at 75 doing deals, moving pieces around the board, so
that's awesome.
And so we've got a ways to go. We're building a big company is what we're doing.
That's amazing, which it's probably a natural progression then to, I'm going to assume that your best deal ever is a multifamily. So tell me about it.
Ooh, yeah. So one of the deals we've got, good Lord, we've got a number of them that are just so killer, but I'll pick one that's in your neck of the woods. We focus geographically kind of in the Southeast and the Southwest. Those are the strongest demographic economic drivers in growth over the last 10 years, projected for the next 10 years. Yep. People are leaving the high tax states and coming to these areas. But so we had a property that we got in a sub-market there of Atlanta where you're at.
I want to know why I didn't get a phone call.
I know, right? So, but now, hey, we're in, brother. You're in.
Right,
so, like,
good.
Yeah, like I'm probably coming up there in another month, on another deal. So,
we're talking.
Yeah, for sure. So that deal there, how it came together is, we strategically positioned ourselves as kind of a go-to person, like a no BS. We're not going to screw around. I'm a man of my word. That's really fundamental and key, that people in this space, when they're selling an asset that's, $5 million, $7 million, $15 million, they're looking for a performing entity, somebody that's going to be proven. It's not a maybe. And so we, cultivated that intention, cultivated that in the relationships that we developed. And, even where we maybe had to kind of on occasion swallow a bad pill, we swallow the bad pill because 10, 20 grand ain't going to kill me. But at the same time, I'm showing, look, I'm not going to jerk you around over something that's small ball. Mm-hmm. And so by doing that, it came about that a deal that was there fell out of contract because the buyers were all jerking around and being idiots. And, making a mountain, dude, when you're buying something for whatever, $4 million and you're going to make and piss and moan about something for 10 or 15 grand, that's just foolish.
Yeah.
Right. And so that was taking place. It fell out of contract. I'd not talked to or dealt with this person before, but they knew another person that had dealt with us. So again, relationships are so critical. They called me up. Hey man, I talked to such and such, said that you guys are awesome. I've got a property that shapes up exactly like one that you just did with them, and I want to talk to you about it. I'm like, well, yeah, let's talk. And just under 100 unit deal, self-managed, kind of mismanaged, and rents were low. And again, that's a lot of times a combination where a guy's owned it for a period of time. They're managing it themselves. Maybe their cost basis is low enough where, they don't need to really drive to market rents. And, they think they're going to do a better job, managing it themselves, but they're really not a pro.
Right.
And so all those recipe factors came together, and I'm like, boom, let's dive into it and let's jump in. And then when we dove into it, it's like, yeah, this deal tees up. It's a home run.
Well, let me ask you this. So did you have like a commercial or a multifamily agent who's out there looking for deals who tripped over this deal?
Yeah, great question. No, so what we've done, and I think, and there's different approaches people could take in this space, but the majority of assets, because of the sophistication of the seller in most cases, or in also the dollar amount for which they're selling, majority of assets are going to trade through commercial brokers that specialize in that arena.
Right.
That doesn't mean that some of these one-offs trade seller direct kind of thing, and we focus on that too, but the majority go through that. So what we've done, when we go into an area that we geographically identify that this is the area we want to focus on, we do the ground and pound. And what I mean by that is we roll up our sleeves, get dirty, make relationships, make connections, find out, who are the 3, 4, 5 guys that are really the movers and shakers in this arena, this market, and then begin to connect together with them for the purpose of letting them know that we're a no BS, straightforward, get it done kind of guy. And so it does take work. I mean, it took, probably a year of developing and working and proving and connecting and all of those things. Everybody wants like the kind of the Matrix blue pill and wham, it's done.
Right.
Not like that, man. So because even now people, they see, holy crap, you got 5 deals in the last 12 months. You got 2 more. It's like, man, I want to give me the pill. Right. It's like, yeah, no, we've been working at it and grinding to do the things that other people don't do. And out of that, those relationships form. And then boom, that's where it's like we were on the short list. Because that's the deal, right? If something like that's an off-market property, they're not going to call Ding Dong Jimmy, who, kind of, hey, I'm the buyer. No, they're going to call the person that's like, I know that if we do something with this guy, it's a done deal.
Yeah.
Right? Especially like this one, it fell out of contract because the last guy, not so smart.
Yeah. So this is almost like a pocket listing where there's an agent who knew you, and before they put it out to market, they called you up.
Yeah, exactly. Yeah. I mean, so the deal fell apart. He talked to another cohort that we just dealt with probably 3 months earlier. And again, in that deal, see, this is where people are so short-sighted, right? Like in that deal, we didn't retrade them to get an extra 20 grand, right?
Mm-hmm.
Like, oh, hey, this is, there's cracks in the paving and, like stupid crap that I would have already seen. It's like, no, we just, hey, there was something wrong with the plumbing. It's 10 grand. Let's make a deal on 10 grand. Okay, no problem, right?
Yeah.
It's reasonable. And so as a result of that, when that deal fell apart, he talked to him and was like, oh my God, dude, Randy's your guy. And he'll get it done. He's straightforward. And that's exactly what played out. And see, that's where people miss. Like, how come I didn't get the deal? Because you were a smack over 20 grand on the last deal, and you burned your bridge.
Yeah.
And so that's where, again, for us, we're long-term focused, right? Like I told you in the beginning, like I got drunk on house money in 4, 5, and 6 with the short-term gains. And then, become wiser to see like, look, hey, I'm in it for the long haul. Yeah. And so, that really fostered the result. Yeah. And so, bam, he called us directly. I mean, and again, now having the skills, knowledge, and understanding, we didn't dick around with it, man. Yeah. Like, it was boom and done within 2 hours. Really? Like, that's amazing. Like, I remember I was in Sarasota at another property dealing with a deal we were trying to lock up down there. I get the call. I call my office, forwarded the email to one of my underwriting guys. I said, man, get this done within the hour and call me back. And then boom, he called me back. It's like, okay, I pulled up on my phone, looked at it. It's like, yeah, at that price, it's a winner. Bam, I called him back. I said, we'll have the LOI to you, within, the next 30 minutes. He's like, yeah. And I'm like, yeah, you said this need to be done. I'm going to get it done.
That's amazing.
Yeah, for sure. So in that was impressive to them too. You know what I mean? And
absolutely. So, you're creating that reputation. That's that you've already created, and you're just further enhancing that reputation.
Yeah, further it on. And then that guy, I mean, he kind of jerked us around a little bit too in the beginning. Not the broker, but the seller. And I'm like, dude, look, hey. And I ate it, right? I ate it. I'm like, it's okay. Hey, like, that's my thing. That's all good. But it's like, hey, you see what we do, right? And he's like, dude, we will hook you up again and we'll work together.
That's awesome.
And again, it's that same mentality, having the right mindset. I just did a podcast maybe a week ago on this of like, if you're going to succeed and win, it starts right there, having the right mindset. Because if you've got the wrong thinking, it's going to subvert you every time.
Yeah.
Because again, like your emotions kick in when the guy's trying to jerk me around for 15 grand.
Yep.
Well, that shouldn't be, and
right. Get the ego out of the way.
Yeah, for sure.
Look
it's
at
like,
the numbers,
out of the way. It's like 15 grand's nothing, man. We'll make that on this deal and the next deal.
That's right.
Yeah.
Well, so talk to us for a minute about how you funded it.
So with that, we typically have 5-6 people that will fund equity together with us, including, ourselves. And we've got the track record to be able to qualify and get the Fannie Mae, Freddie Mac, kind of Cadillac of financing. So we've got those relationships and track record in place. And so this particular deal, because it was like 95% occupied, qualified for Fannie Mae or Freddie Mac, which again gives you the most interest only, the lowest interest rate, the 30-year amortization, fixed rate debt for 7, 10, 12 years. So that was kind of, it teed up, perfectly for that. We ended up going with a Fannie Mae loan on the property, and then had, I think, maybe 7 other people that invested with us on the deal there. I'm just kind of looking it up here. It was, right about probably $1.2 million in terms of the equity piece, and then kind of an all-in of about $4 million.
So $4 million was the purchase price for the apartments?
Yeah, just under 3.87 is what it ended up being.
Gotcha.
And then we're putting into it about $250,000 to renovate the interiors. The property was clean, and I'll share some photos with you of it and all like that. But it's like the property was clean but dated, and that's kind of part of the recipe we look for too. These properties oftentimes for true workforce housing are built in the 70s. Got brown. This one actually had brown cabinets, avocado, countertops, old school dingy bathroom, tile, which is a great recipe, because then we can go in for probably about $3,200 to $3,500, redo the kitchen cabinets, repaint them, seal them white, put new handles on, recoat the countertops, put in new kind of plank style flooring, two-tone paint, new brushed nickel lighting and fans.
Yep.
It's like a brand new 2000s built apartment, and it cost us like $3,500. So, we go in, and that was like $250,000. We're going to get the pool back online. So now there's a nice amenities feature, get these units renovated. And now we, and then bring in professional management, quality, clean, professional management, redo the clubhouse, make it look nice and professional. And those are the recipes that now it's like, wow, this place, man, it looks nice.
Yeah. That's amazing. So give me an idea of rents. What were they before, and then what were they after?
Yeah. So the rents on this were now, before they were $550, and the competitors in the marketplace were $700, $725, and $749. And so we really, you got to know your stuff, especially in this arena. So we dive in. We know the comps. We know the condition of the comps. We know what their occupancy is. So all that going in, we know who we're dealing with. So in our underwriting and our pro forma, because again, we take a conservative approach to how we do things. We're like, hey, all our numbers will work if we're able to hit 650. And again, we also recognize there's, maybe some type of economic slowdown, recession on the horizon. So again, strategically thinking, we want to offer a better product than the competitor at a lower price or at the same price, but ours is better. So again, we've got that competitive advantage. That's kind of our secret sauce. So we underwrote it 650, we'll kill it, right?
Yeah.
Against the competitors. So we go in, we start the exteriors, get that going in the first 30 to 60 days, start renovating a couple of units. The very first unit we rented at $725. The next one we hit $750, and then the third was $785.
Wow.
So, I mean, totally killing it. And like, we're also changing the demographics of the tenant base. Like when we bought it, the fire marshal came out just to kind of, hey, let's take a look at, everything, new owner and all that. And this again goes to professional management. Our manager is like, hey, let me show you the new units that we're offering. She takes him, shows him a renovated unit. He's like, wow, I didn't know this was here. I've got 2 firefighters coming on board that are new. I'll refer them over here. So like one of those first 2 that was, I think it was the second unit rented at $749, was a new firefighter that's hired to that community. And then we rented to another one as well. So, and again, that's kind of the thing that, because now we're offering a better product, a better community to live in, it's elevating the maybe the strata of the person that's living there. Still workforce, but just a notch up because it's a better place to live.
Sure. Now, so you've created all this cash flow. So how is everybody participating in your deal? What does that look like?
Yeah, so we structure a preferred scenario so that our investors are getting a preferred return on cash flow, and then a preferred return on the back end. So they get paid first before us, so that they're going to hit a 12% return on their money. They can sleep at night knowing, come basically Hades or high water, that's going to happen. And the reality is we've had people that have been invested with us in various forms over the last 16 years. That's kind of been the benchmark. So we're not maybe ultra sexy, like, wow, man, you're going to make 22% on your money. But it's like, it's the tortoise in the hare, right?
Yeah, right.
The tortoise just clips along. And I say this, I was talking to a guy yesterday. It's like, just imagine your portfolio. If you'd have made 12% on your money and not lost for the last 16 years, where would you be?
Yeah, right.
For
yeah.
sure.
It's crazy. Yeah.
Yeah. And so again, that's kind of the structure that, again, we're not, loading up on asset management fees and all this stuff. So it's like, hey, we're driving performance, making sure the property's performing to its maximum potential so that our investors that invest with us, they're going to get their return. And then, yeah, we get a great return if we kill it on the back end. But, again, we got to work to make that happen. So it gives our investors also a measure of confidence and assurance, because it's like they know they're going to get their number hit because we're working to make that happen.
So they're basically your investors are getting paid first up to that 12%. And then after that 12%, what's it look like for you right now in terms of cash flow?
Yeah. So in terms of cash flow for us, I mean, that we probably, on that deal here, we're clipping to the year mark on it. So again, we're probably going to be at about 38,000, 40,000 of cash flow on it coming to us this year. Yep. And then again, as we drive that performance over the next 2 years, that will clip up,
Yep.
So again, even for us now, a lot of times on a deal, we may put the work in the first 10, 12 months. We're not really capturing a lot because we're pushing and driving performance.
Sure.
And pushing return to investors. Like, so all of our projects and investors have been, dividend positive quarter one, day one, you know what I mean? Because again, we're willing to not be paid so they get paid. And it's just part of that model. Everybody's got a different approach. And, we've kind of put it like, hey, we're going to put them first. Because like, even, good Lord, the people that have been with us 16 years, in 8, 9, and 10, they lost nothing. Right now, we got our ass kicked. Right. I mean, like everybody did,
Sure. Yeah.
But they didn't lose because we put them first.
Yeah.
Right. And so it's just been kind of how we've operated for the last since 2003. So coming up on 17 years.
Yeah. Well, everybody knows multifamily can produce great cash flow, but the reality is you create ridiculous amounts of equity when you turn that thing around. So what are you guys looking at in terms of equity already created?
Yeah, already created. It's about $2 million, So,
come on.
I mean,
that's crazy.
For sure. Exactly. So, and it's because of the, again, the multiplication, you know what I mean? Because we're using the leverage where we're borrowing, like $3.2 million on this deal. So there's a big lever right there that we're using. Plus we've got the scale of, whatever, call it 100 units, and then that cash flow coming from it. So those two factors, and then the operational assassin, right? The money's made in the operation. Like I had one guy, there was a couple of entrepreneurs like, yeah, we'll pool our money and buy a place. And I'm like, you're the kind of people that I buy deals from, right?
Right.
They're going to put their money together, hand it to some ding-dong manager that's going to run the place into the ground. It's like, because every week we're driving performance. We're looking at the numbers. I'm on the phone talking with the management team and ensuring that weekly the process is being adhered to.
Yep.
And the numbers bear that out. And so that's where that third component, people kind of think, oh, it doesn't exist. No, that's where the work is, man. That's just as much work.
Totally. We bought a storage facility that was in distress, and it was being managed by a property manager, and they were at 65% occupancy. We kept that manager in place, just put a new person on site. Yeah. And because we were pushing them, we got them to 98% occupancy. It's the same manager.
For sure.
But you have to lean on them to perform.
the accountability. That's where people miss that. They think, oh, they're just going to do their job. It's like, dude, that's human nature, man. It's like, and me and my team, we're more motivated than anybody, right?
That's right. You don't get paid until it's performing.
That's kind of our mantra. I just told this to another manager in another state. It's like, look, and I'm in my office here. It's like, in my office, there's a wall. On the other side of that wall is the result that I have to get to. And I don't give a crap what you have to do to get through that wall and get to the other side. All we care about is the results. Would you agree with me that that's what our objective is to get the result? And she's like, yes. Then I said, it doesn't matter what you've got to do to get to the other side. And she's like, I agree. I said, well, that's the standard that we're going to adhere to, right? Right. And because, again, we had to fire a dude that was, just not cutting it, man. And so she's the new person. She's killing it. But even though she's killing it, we're reinforcing, like, this is the standard.
Yep.
And it will be held to every week.
If they feel that accountability, it changes everything. If they know you're going to be calling them at the end of the week, what's going on and where's performance.
Yeah. Like
absolutely changes things.
Yeah, for sure. And that's, and again, now that's work, right? I mean, because that's part of what we have to do. You'd like to set it and forget it. I mean, I dreamed that way back in 2006 or 7, right? Like, man, we'd like to just, but it's, you can't. You got to be on it. You got to be on it.
Yeah, absolutely. So what did you learn from this experience, and what would you do differently in your next apartment acquisition?
Yeah. So, I mean, again, I think the most critical part there, it reinforced, is the relationships and the willing to look long-term, right? I mean, and that, dude, look, I had another guy. This sounds like a reoccurring theme, right? But it's just another guy stiffed me for 20 grand, right? Like, and again, he could, but it wasn't right. And your emotions kick you up, right? Just it's human nature, man.
Sure.
And so, just you got to bat it down. So again, it was easier for me just to be like, you know what? Hey, that's not right, but whatever, And so that's part of the thing I would learn is stay focused on the long-term objective. Don't get emotionally distracted by the nuances or the challenges that hit you, fairly or unfairly.
Yeah, and that's so good. Control your emotions in business, because emotions don't belong in business. Logic belongs in business, right?
Absolutely, man. And and I go back to the mindset thing. Like, I've been working on my mindset realistically for 22 years since I put my faith in Christ at 27, and that began to be a change in my mindset, my life, and I've really focused on that. And it takes work, because we're just wired that way in our emotions and your ego. And, it's like, and then even too, the more success you have, you see guys get puffed up oh man, I'm God. Like, and it's like, it's like, you're fixing to stumble, bro,
Pride comes before the fall, man. I've seen it how many times?
Oh my God. Yeah. So it's like, even too, I met this one dude, I'm at a conference, and I'm like, oh, hey, how you doing? And then the speaker dude that's speaking's like, hey, Randy, how you doing, man? And like, oh my God, Randy's doing this and Randy's doing that. And like, the dude that met me is like, you didn't say nothing about all that. I'm like, well, just, I just do what I do, man. You know what I mean?
Right.
So
you don't need to brag on yourself. Let somebody else brag on you, right?
Sure.
Totally. That's amazing. So somebody's out there watching this and they're motivated to get an apartment under complex. There's a lot of guys I know right now looking for multifamily. What advice would you give them?
Yeah, I mean, I think the paramount number one thing is you've got to learn how to really evaluate the complex and what the real opportunity is. And that's going to take work. I dove into that for months. Had a friend of mine that lives on the beach. We connected together. He'd been in the space 16 years. He mentored me as well, and that was tremendously helpful. I had a strong knowledge base from what we've done and my original mentors. But again, just, I think a lot of times guys will take insight that they have from the current real estate experience and try to juxtapose that over, and it's not the same. It really is not. And so, I had one guy say, hey, I've checked this deal. Would you look at partnering with me? It's worth, $5 million and, it's in my neck of the woods. And I'm like, oh, is this deal? Like, I'd already seen it. My team had already underwrote it. You know what I mean? Like,
right.
and it was not a good deal. And I said, well, let me look at it again. I come back, we underwrote it. It was max 4.2 million. He was like, it's all good at 5, and so he's off by 800,000 because he's using not correct analysis or information. And so I think that's the number one thing I would say. If you really want to get into the business, you've got to find the pathway to really understand all the nuances of underwriting and understanding, how to properly value the complex. Because there's undoubtedly people overpaying right now
for
a complex because they don't really know, and they're making, projections that are not going to be realized. And so what's going to happen is it looks good today because that's today.
Yeah.
But then they're going to have their ass handed to them 3-4 years from now because their projections were not right. They were based on erroneous information. And so that's the number one thing, is get the understanding.
Yeah, that's good. Folks, did you hear that? Don't be so eager to jump into a multifamily deal that you overpay. Be conservative, underwrite correctly, and hopefully you'll land a deal like Randy did. Randy, thanks so much for your time, man. This was incredible.
Awesome, man. Thank you, brother. Great to see you, man.
All right, take care.
Take care.
Thanks for listening to the Best Deal Ever show, brought to you by BiggerPockets. If you've been energized, entertained, or enlightened by today's show, please feel free to hit the subscribe button. You can also follow me on Instagram and Twitter at Ken Corsini, or check us out online at redbarnhomes.com. And don't forget, one man's best deal ever may be the inspiration you need to create your next best deal. So, hope to see you on the next episode.